Greetings, financial enthusiasts. Welcome to Investor Web, your go-to resource for all things investment. This is the place where we demystify the world of finance, simplifying complex concepts into easy-to-understand nuggets of wisdom. Our passion is to empower you with knowledge, and today we're focusing that passion on the banking sector. We'll be peeling back the curtain on the banking world, revealing the key strategies they employ to turn a profit. Today, we delve into the heart of banking operations and unravel the top 10 ways banks make money. First off, banks make a significant chunk of their revenue from interest on loans. Let's dive into how this works. Imagine a bank as a middleman between depositors who have surplus money and borrowers who need this money. Depositors entrust their money to the bank, often earning a small amount of interest. On the other side of the equation, the bank lends out this money to various borrowers. These borrowers could be individuals, like you and me, needing a mortgage or a car loan, or businesses seeking to expand operations. The bank then charges these borrowers a higher interest rate than what they pay to the depositors. This difference, known as the interest rate spread, is essentially the bank's profit. So every time a borrower pays back their loan with interest, the bank's coffers ring. In essence, the interest on loans is the bread and butter of any banking institution. Next on the list, we have fees and commissions. Now just think about the last time you used an ATM that wasn't from your own bank. You probably paid a fee, right? Or consider when you might have accidentally dipped below your account's minimum balance. You were likely hit with an account maintenance fee. These are just a couple of examples of the various fees that banks charge. Now let's shift gears a bit and talk about commissions. Banks often sell financial products like insurance policies, mutual funds, or certificates of deposit. For each of these products sold, the bank earns a commission. It's a bit like when a salesperson earns a percentage of the price of each product they sell. So these are some of the ways banks levy fees and earn commissions. They might seem small and insignificant at first, but when you consider the millions of transactions occurring every day, these fees and commissions quickly add up to a significant revenue stream. Moving on, we have interchange income. This is a fascinating mechanism through which banks earn. Every time you use your debit or credit card for purchases, banks collect a small percentage from the transaction. It's a bit like a toll booth on a financial highway. Whether you're buying a cup of coffee, a pair of shoes, or booking a holiday, your bank is quietly earning from your spending habits. This fee, known as the interchange fee, is paid by the merchant's bank to the customer's bank. It's a way for banks to cover the cost of handling the transaction and bearing the risk. In essence, this is a profit model built on volume. The more transactions customers make, the more income banks generate from interchange fees. So every swipe of your card is money in the bank's pocket. It's a subtle yet powerful way banks turn our everyday spending into their steady income. Another significant revenue generator for banks is investment income. Banks, as you may know, don't just store your money in a vault, they put it to work. Your deposits, along with those of countless other customers, are invested in a variety of securities. These may include government and corporate bonds, stocks, and other financial instruments. The goal here is to earn a return on these investments, and that return becomes part of the bank's income. Banks have teams of financial analysts, economists, and investment experts tirelessly working to ensure that every penny is optimally invested. It's a complex and risky business, but when done right, it can be a lucrative source of income. And it's not just about making money for the bank. And these investments also help fuel the economy, supporting everything from infrastructure projects to businesses in your local community. So while your money sits in the bank, it's working hard to generate more money. Number 5 on our list is selling financial products. Banks, as you may have noticed, have expanded their role well beyond the traditional lending and borrowing. They now have a smorgasbord of financial products on offer. From insurance policies to mutual funds, banks have become one-stop shops for all things finance. But why the expansion? Simple. It's another avenue for them to make money. Let's take insurance policies, for instance. When banks sell these policies, they earn commissions. The same goes for mutual funds and other financial products. These commissions represent a substantial chunk of a bank's income. So you see, when you walk into a bank, you're not just walking into a place to store your money or get a loan. You're walking into a financial supermarket, where every product on the shelf is another opportunity for the bank to earn a commission. So, banks are not just about savings and loans, they are full-fledged financial supermarkets. Next up, we have overdraft charges. This is a fee that banks impose when a customer's account balance falls below zero. In simpler terms, it's a penalty for spending more money than you actually have in your account. Banks often offer overdraft protection, a service that allows you to continue making transactions even when your account is in the red. It's a safety net of sorts, but it doesn't come free. Overdraft fees can be quite hefty, often ranging from £20 to £35 per transaction. While this may seem like an expensive way to borrow, it's important to remember that for banks, it's an extremely lucrative source of income. Each time a customer dips into the red, the bank earns a fee. Over time, these fees add up, contributing a significant chunk to a bank's revenue stream. In essence, overdraft charges are a cost of convenience, a premium for accessing funds when you need them, even if you technically don't have them. While it's an expensive way to borrow for banks, it's a lucrative source of income. Leasing space is another way banks make money. You see, banks are not just financial institutions, they're also property owners. Many banks own the buildings where they operate. These properties, often located in prime commercial areas, provide an excellent opportunity for generating additional income. Banks can lease out unused or spare areas of their premises. This could be to retail outlets, coffee shops, or even other businesses. It's not uncommon to find automated teller machines or ATMs installed in these lease spaces. ATMs are a critical component of the banking ecosystem, and their placement in high-traffic areas can be a lucrative venture for banks. This leasing strategy is a win-win. The lessees get a prime location, often with guaranteed foot traffic, and the banks receive a steady stream of rental income. It's a practical use of space that might otherwise remain unoccupied or underutilized. So the bank building itself can be a source of income. Foreign exchange services are another revenue generator. Now, you might think of foreign exchange as just a service for travelers, but it's much more than that. It's a bustling marketplace where currencies are bought and sold, and banks are the brokers in this trade. When you, as a customer, want to exchange your dollars for euros, for example, the bank doesn't just pull those euros out of thin air. They buy them on the foreign exchange market, where the rates fluctuate constantly. Now, the bank will charge you a slightly higher rate than what they paid. That's their commission. It might not seem like a lot per transaction, but when you consider the sheer volume of transactions happening every day, it adds up to a significant amount. This is also a service that's not limited to individuals. Businesses, particularly multinational ones, also need to exchange currencies regularly. So every time you swap dollars for euros, the bank makes a little profit. Last but not least, we have wealth management services. Now, this is where banks put on their financial advisor hats and really get to work. They offer a range of services to maximize their clients' wealth, including financial planning, asset management, and investment advisory services. Imagine having a personal trainer, but instead of helping you get fit, they're helping your money get fit. They develop a comprehensive plan tailored to your financial goals, manage your assets to ensure maximum returns, and advise you on investment opportunities that align with your risk tolerance and financial objectives. In return for these services, banks charge a fee. This is typically a percentage of the assets they manage for you, so their incentives are aligned with yours. The more your wealth grows, the more they earn. So banks are not just about holding your money, they help you grow it too. So there you have it. The top 10 ways banks make money. We've delved into the world of banking, unveiling the diverse strategies they employ to generate income, from the interest on loans forming the bedrock of their profitability to the lesser-known yet equally important interchange income. We've also touched on those fees and commissions we often overlook, the significant income from investment activities and the sale of various financial products. We've highlighted the controversial overdraft charges and the entrepreneurial venture of leasing space, not forgetting the subtle yet profitable foreign exchange services, and lastly, the comprehensive wealth management services that banks offer their high net worth clients. Each of these 10 ways forms a crucial part of a bank's multi-pronged approach to income generation, each contributing to the robust financial institutions we interact with daily. While this may seem like a great deal to digest, understanding these elements can provide valuable insights into the financial world, aiding in making wise investment decisions. Knowledge is indeed power, especially when it comes to investing. If you found this video insightful, do give it a thumbs up and share it with others who might find it useful. Don't forget to subscribe to InvestorWeb for more financial insights and to stay updated on our latest videos. Remember, the more you know, the better your investments. Until next time, this is InvestorWeb, your guide to smart investing.